Hey guys, just wanted to make this quick video and let you all know that the interest rate, the federal interest rate. So what the Fed does is they control, they try to kind of curb inflation by adjusting the Fed rate, which we haven't really seen do much, let's be honest, but we won't get too political with this video. But mortgage buyer Freddie Mac reported Thursday that the average on the benchmark 30-year rate fell to 6.49%, and last week it was 6.58%. So, a year ago it was, we did have an average of 3.11% a year ago, compared to this year at this current same period of time. But the rate for a 15-year mortgage, which is popular with refinancing or those refinancing homes, it did also edge down to 5.76%, and it was 5.90% last week. So, it was 2.39% 1 year ago. So still relatively higher than we're used to, but unfortunately that may be the way that it stands right now. The Federal Reserve key rate now is in the range of 3.75% to 4%. Federal Chair Jerome Powell, he did talk the other day, and he signaled that the Fed may increase its key interest rate by just a half point at its December meeting. So I'm not exactly sure which day in December that will be, but a lot of these mortgage companies have already worked in the increases in the federal rate, and they did a lot of that in the beginning when they started seeing, and they pay attention to the market. They increase to already account for those increases in the beginning, which is kind of what they did here. So now that they're kind of seeing a signal from Jerome Powell at the Fed chair that rates won't climb as fast as they were climbing. There's a chance that now we could start seeing them come down again. What we are seeing that right now, which obviously a little bit of an increase helps, right? Could save you $100 or hundreds of dollars on your monthly mortgage. So, it beats renting, right? Still. So, the rate increases could then fall to a more traditional quarter point size at its February and March meetings based on previous Fed forecasts. Powell did say that the Fed will likely have to keep rates elevated for longer than originally planned, as inflation has eased somewhat, but remains way above the central bank's 2% target. So we'll see, guys. The rates are getting better. Housing is still very, very slim, especially here in the Southwest Florida market. We just don't have the inventory still that we need. Now, we're not in a market that we were in 6 months ago, where we had 10, 11, 12, 20, 25 offers on properties. It's more of a, if you're a seller, you have to price your market, or I'm sorry, your house right on the market. You can't overprice it expecting people to be chomping at the bid at your property. So you can't just hire any agent who's going to throw it on the market anymore and expect them to, expect your house to sell for whatever you want it to sell for. So keep these things in mind. I just wanted to update you guys on the current interest rates. It's been a hot topic lately, obviously. If you guys have any questions, please feel free to reach out to me. Shoot me a message. Follow me on YouTube, Instagram, Facebook, Frank J. Glab PA on those platforms. Thanks, guys. Have any questions, let me know. We'll talk to you soon.